We're a few weeks out from Christmas. Calendars are filling up, people are starting to mentally check out, and real estate is no longer a thing that everyone wants to talk about at dinner. And historically, this is when the market becomes the easiest to read. When activity slows, emotion fades, and what is left is the data. And right now, the data is actually telling us a pretty coherent story if you start at the right place. And the right place to start is, interestingly enough, mortgage rates. Interest rates have been the single biggest driver of the housing market over the last 2 years. And right now, they're doing something that they haven't done in a while. They're stabilizing. Rates have been sitting roughly in the low 6% range, fluctuating about 6.1 to 6.5%, and they stayed there for several weeks. That matters a lot more than people actually realize. When rates are volatile, buyers freeze. They don't know what numbers to trust, lenders can't give confident guidance, and sellers hesitate because they don't know how much demand is truly out there. Stability changes that behavior. It allows people to plan instead of react. Affordability is still a challenge. Nobody's pretending otherwise. But compared to where it was last year, buyers are no longer recalculating payments every week. Monthly costs have plateaued, and that's why buyer activity didn't collapse heading into the holiday season the way that many experts seem to believe. Once you understand what rates are doing, the rest of the market actually starts to make a lot of sense. So let's start off by talking about active listings. Inventory peaked earlier this year and has been moving lower ever since. Right now, there are just under 4,000 homes actively listed across Orange County, and importantly, inventory dropped to about 4% in the last 2 weeks. That's a sharp pullback even for this time of year. But this isn't sellers rushing for the exits, it's actually the opposite. Sellers are choosing not to compete in the holiday season unless it makes sense for them. Homes that didn't get traction got pulled, new listings are being delayed, and that's exactly what would have normally happened in December. When those factors combine, sellers become selective, and selective sellers reduce inventory. So let's look at demand. Buyer demand has eased ever since we've moved deeper into the holiday season. Pending sales are slightly down over the last few weeks, and that's to be expected from travel, family, obligations, and year end distraction that always slow down the pace. Now, here's the important part though, demand has not fallen faster than inventory. In fact, demand and inventory have been declining at almost the same pace. That alignment is critical. When both sides of the equation retreat together, the market doesn't tip, it actually neutralizes. That's why the market doesn't feel overheated or distressed right now. There's less activity, but the ratio between buyers and sellers remains surprisingly intact. That balance out there shows up clearly when you start looking at expected market time. Homes are taking about roughly 83 to 85 days to sell on average, and that number has actually improved slightly from earlier this year. And it sits actually in line with long term norms for this part of the calendar. Expected market time is one of the most reliable truth indicators when looking into housing. When it's rising rapidly, sellers are losing leverage. When it's collapsing, buyers are getting crowded out. And right now, it's flat. That tells us that pricing still matters, presentation matters, and unrealistic expectations are still being corrected. But the market is absorbing homes at a sustainable pace. Now, let's address the topic that keeps resurfacing online, distressed homes. There are fewer than 10 listings active across all of Orange County right now. That represents 0.2% of the market. That number matters because distress is what turns slow markets into dangerous ones. And simply put, it isn't present here. Homeowners have equity. Most are sitting on a fixed rate loan, and they have the ability to wait. That's not a market being forced to move, it's a market choosing when to move. Even at higher price points, the data is starting to turn constructive. Luxury inventory has declined, demand has stabilized, and expected market time for higher end homes has improved just modestly. Luxury always reacts later than entry level housing. When that segment stops weakening, it's usually a sign that broader conditions are stabilizing underneath. So, when you zoom out and connect the dots, a pattern emerges. Rates are no longer chaotic. Inventory is tight because sellers are selective, not stressed. Demand has softened, but it has softened evenly. Market time is stressed, but steady, and distress is virtually non existent. And luxury is holding together better than it was earlier this year. This isn't a breakout moment, but it's no longer a slide either. Which brings us to what actually means for people trying to make decisions this time of the year. If you're a buyer right now, this market is giving you something rare, time. Fewer bidding wars, fewer emotional decisions, more room to evaluate monthly numbers, location trade offs, and long term plans. You may not see every possible option available at this exact moment, but you gain clarity and leverage by understanding how pricing behaves before spring activity returns. This is a planning window, not a rush window. If you're a seller, competition continues to thin. Listings are being pulled faster than they're being replaced, and buyers who stay active in December tend to be serious, qualified, and timeline driven. Pricing correctly matters more now than volume, and presentation has a disproportionate impact in a thinner market. Homes that are positioned well can stand out more than they ever will once this inventory rebuilds early next year. So, Heading into the final weeks before Christmas, the Orange County housing market isn't dramatic, it's deliberate. Slower, steadier, and increasingly understandable once you follow the chain of cause and effect. Rates calm down, sellers step back, buyers move selectively, and the market finds balance instead of momentum. That's where we are right now. So, I'm Byron with Baba Homes, and you stay classy out there.